Live from Austin, Texas is Jack Roberts from Simpler Trading. No relation to me. Jack, thanks for joining us.
Thanks for having me.
So what do you make of the latest China tariff exemptions? Let's start there. We have that news out of China that it is removing some products for the moment from its tariffs. And how do you think that might help things in the ongoing trade discussions?
So I think right now China's doing everything they can to stay above water. They're clearly running a negative deficit, about 9 times their GDP. So whenever you have that and you have the disruption in Hong Kong and they're over-levered, China's in a really bad spot. So what they have to do is figure out how they're going to play ball for the next, going into 2020 as the election cycle comes in, and also knowing that inventories are up and denominated net debt cycles are coming in, and they are, with a strong dollar, hard to pay off. So right now, we're kind of in a false optimism stage with China.
Hey, Jack, it's Kristen here. So we've talked a lot about Trump's tweets, and I'm wondering how much of an economic headwind you view the president's social media feed.
Well, I have as an options trader and in the markets, I've been really patient this year, to say the least. As far as the economy goes and his tweeting, I believe that it's really been, in a weird way, kind of beneficial, because we have a strong economy. We have a gig economy. As far as Trump tweeting, it's not really a negative. It's not an extreme positive, but as you know, the economy is pretty good. And as far as social media going into 2020, I don't see anything changing. I think being pretty much aware of what's going on and understanding that little to no reaction was followed up by the FOMC meeting last time, and then heading into September 18th, where we'll have another one, we might have little to no reaction and then followed up by a Trump tweet. So it does mix up some things, but we're expecting it and we'll be ready for it.
Hey, Jack, you are overall really bearish. You have an S&P target of 2,800, and I know that you're not liking the semiconductor, specifically NVIDIA and AMD. Is there anything you like right now?
There is. I actually really like Lululemon. It's proven to pivot really well. I like Disney coming into Disney Plus, streaming on November 12th. That'll overnight add about 10 million subscribers, which is going to take significant share away from Netflix. Netflix, we've already seen taking a huge hit. I called it going lower than 330 down to 300, and now we're around 286 this morning. So whenever you talk about semiconductors and streaming, semiconductors over the year on a percentage basis has seen the most negative year since 2015. So AMD and NVIDIA have gotten hit, but they're still staying around their same valuations. I think the story for 2020, as far as semiconductors, we're going to see a small devaluation. And whenever it comes to Netflix and Disney, those names that I'm paying attention to, I think we'll see Disney popping and really going to higher highs, and then Netflix slowly bleeding, for lack of a better term.
Jack, I'm glad you brought up Netflix and Disney Plus. Yeah, we saw that you're short on Netflix. And since you brought them up, we will be discussing later in the show all of the Apple news, specifically the pricing for Apple TV Plus, that $4.99 per month, which you saw a lot of rapid reaction from analysts saying, wow, that price is so low, that really undercuts and hurts Netflix and Disney Plus. I sort of have seen a lot of studies, and my reaction to that is I think we're still in a time when people seem willing to add more subs. They're not yet at a point where they're saying, wait a minute, look how many of these things I'm paying for, and they're cutting subs. So it's interesting to react in that way with regard to Netflix versus Disney Plus. I mean, you're bullish on Disney Plus, so am I, but I've heard the argument that all of them, at least in the short term, can do very well before we have to worry about people cutting.
It's a very competitive price, and it's very strategic on Apple's part. I'm not surprised by this at all. That competitive pricing is going to hurt and take away that market share. Right now, it is a grab for the gold, the last straw. Netflix is really spending millions of dollars to create content, and some could argue that a lot of their content is actually diluted. So Apple's doing everything they can to be competitive, and they know the storm is coming here in the fall of 2019 to figure out who's going to actually stay on top and take advantage also of Netflix potential decline.
All right, good insights. We'll have to have you back on soon. Interesting predictions about the streaming wars. Thanks, Jack Roberts.